Hello and a warm welcome to the CNBC Africa Special Debate. I'm Guguletu Cele. Now, as many of you may be aware, the 26th edition of the World Economic Forum on Africa will be held in Kigali, Rwanda this year. But oddly enough, the once positive Africa Rising narrative is now somewhat in jeopardy. All of this given the fact that we're facing global issues such as the current slump in commodity prices against the backdrop of changing monetary policies in developing economies, and also fundamentally infrastructure development taking place at a rather slow pace. Against this, how then do we position SADC economies to be competitive players on the global space? Well, join us as over the next hour, we take a look at how best to bolster these economies and position them to be quite competitive when it comes to their global peers. And joining us for that conversation as we take a look at the road to Kigali are my esteemed panelists who will be joining us to analyze, unpack, as well as debate some of these critical issues that are on the ground. To my immediate left is Mr. Kingsley Makubela, who is the Chief Executive Officer of Brand South Africa, followed by Nicola Kolombic, who's Executive Director of Yellowwoods. Next to her is Dr. Jacqueline Chimahanzi, who's a Senior Strategist at the Industrial Development Corporation. And to the end is Dr. Achankeng Leke, Director at McKinsey and Company. Ladies and gentlemen, thank you so much for joining us today. We are not alone in conversation, but also joined by our audience members who later on in the conversation will be participating by posing their questions to our panelists and sharing their views. But let's pick up on the major themes that have certainly been highlighted. Just a moment ago, we got to observe the fundamentals of understanding what it actually takes to measure and also become a competitive economy. We've already highlighted several of the threats, as many of them are reported on a day-to-day basis. But Acha, I'd like to start off with you. Given the fact that you participated in the McKinsey report regarding the moving lions of Africa going forward and this positive African growth story, is the Africa Rising narrative still relevant today?
Well, thanks for having me. The answer for us is absolutely yes. We are in the process of putting out a new report in a few months, given we put out Lions in the Move was 5 years ago. And we actually think that the title of the report, I think the title of the report should be, Yes, the Lions are still on the move. Right. The reality is it is a positive story. It is more of a nuanced story. As much as 5 years ago, every single of the top 30 countries that account for 97% of Africa's GDP, 25 of those accelerated the growth. Things have changed a bit, right? We still have 12 countries that have accelerated the growth in the last 5 years. If you look on one axis on growth and the other axis on risk, which is some of the risks you talked about, some of the macro and political economic risks, some of the micro risk around diversification or lack thereof in some countries, some of the issues around security, you really see a set of different sets of countries. You have a set of countries which what we call the transition economies, the Ethiopias, the Kenyas of the world, the Cote d'Ivoires of the world, doing very well actually on both dimensions. On the other extreme, the ones that are more exposed to risk and are growing slower are typically the North African countries and the oil exporters, right? That's really who's been affected. And so you see more of a nuanced story across the continent, but overall it's still quite a positive story.
Still a positive story. Jacqueline, let's come to you for a moment as we take a look at some of the global factors which are also posing a risk. We know all eyes always fixated on the US, given the fact that it's the largest economy from a global perspective. And the change in their monetary policy stance, it almost seems as though it's stop and start, push and go. Patience is the new word that's once again come to the fore. How relevant is this with regard to the Africa Rising narrative?
I think what we're going through right now feels a bit like a perfect storm. So everything that could go wrong is going wrong, and all at the same time. So it's commodity prices, it's the strengthening of the dollar, it's the US interest rates, it's everything kind of working against Africa. But I think, as I just said, it requires us now to really introspect and to look within ourselves as Africans. We have a population of over 1 billion, yet we can't feed ourselves. There's an opportunity right there. So I think we need to stop this fixation with commodities and see what the opportunities are, because there are many. And the moment that we start servicing those opportunities, we begin to move forward as an economy.
Nicola, let's come to you just to get your opening remarks with regard to the levels of nervousness on the ground. You come from the private sector and quite evidently you feel the pinch once economies do start to shrink and pressures do come in. Are you quite optimistic at the level, or is the story still in jeopardy?
You know, as a business, we focus a lot on inclusive growth, and we've had the opportunity to found organizations that focus on, for example, inclusive youth employment. And one of the things that continues to make us optimistic in that process, I mean, you know, despite difficult conditions, is that I don't think that education system performance and qualifications attainment is in fact an indicator of our human capital. I think that we have a massive pool of human capital, which if we can unlock it in the way that, and particularly young human capital, which if we can unlock the entrepreneurial energy of, you know, provides enormous opportunity to beneficiate effectively in what are difficult times. So I, like Jacqueline, would like to just think about opportunity in the time of this difficulty and the areas of value that we can unlock.
We'll get into that and analyze that a lot further, given the fact that the numbers do speak for themselves when it comes to the opportunity on the continent. But Kingsley, you're the man who has to wear this brand on a day-to-day basis amongst ourselves too. Are your levels of optimism perhaps waning slightly?
Not waning as such. We have a huge scope for growth within the continent. If you look at issues around infrastructure, and very broadly speaking, supply of energy, the road infrastructure and so on, there's a potential for growth compared to developed countries because they've reached certain limitation in terms of growth. So what we need to do is ready to attract capital to invest in these potential areas for growth and generate more jobs and so on. So there is a great deal of potential for growth within the continent. It's how we harness these areas of growth. How do we attract investment? How do we develop sustainable policies in those areas to really ensure that we keep on growing?
If we look at the fundamentals for the moment, Acha's already highlighted that some economies are under pressure. South Africa itself as well, growth of under 1% being recorded just last year, as well as some of our other oil-producing peers under pressure. Is it a GDP number that translates into competitive economies? Kingsley, give us your view, and Acha, feel free to come in here.
Well, not necessarily a GDP number. It all depends. If you look at the growth within the SADC, I think a few SADC countries that are dependent on the commodities, and particularly the oil. Look at Angola. They've really reduced their growth by about 150% of growth.
And asking the IMF for a bailout now.
Absolutely. Now, these are the challenges that we have in terms of the commodities. We've had El Nino impact during the course of last year that goes throughout this year. We're going to have challenges in terms of food supply within the continent. So these are issues that are going to drag us back, but I don't think because we are having these challenges, there are no potential to growth. There are no potential to expand in terms of our own GDPs to grow. The projections that I've seen this morning, for instance, Standard & Poor's, they are projecting that it would grow by about 8%. Of course, 8%. It's a very small growth compared to where we're coming from in 2006 and so on. Mozambique it's projected to grow compared to last year. So this year we'll see some level of growth in Mozambique and so on. So there are pockets of excellence that you see within the continent in terms of growth that we think would actually inject growth within the SADC subcontinent.
You say pockets of growth. I'm thinking East African community countries, Rwanda, 6.9% growth recorded just last year.
Absolutely. So the growth, but also to your point, there's, competitiveness for us is also linked to productivity, right? And again, we talk about Africa, but it's 54 countries. And the reality, you have to get below that, right? So you have a number of countries, even within certain sectors. You look at South Africa, we always complain about South Africa, but South Africa on the continent productivity levels are just as good as China or Brazil. Now the issue is China has been growing, increasing productivity significantly. The last 5 years we have not, right? So I think, again, it's a very nuanced perspective. East Africa community is doing a very good job, right? They alalso realize that individually the small countries, so they're coming together as a community, and that's a community that is working the most, right? To create a larger market and allow people to trade within if you look at intra-Africa trade, for example, it's highest in the East Africa community. If you look at Nigeria, for example, I just landed from Lagos this morning, is the largest economy on the continent, right? In many sectors, it's quite unproductive, right? And they're doing a number of things to try to increase that. But so there's quite a big difference between, to your point, around GDP and competitiveness and productivity.
I know that we focus on quite a bit of the negative, but this is fundamentally painting a backdrop for the environment within which we're working in. And I don't mean to perhaps depress the audience members or our panelists, because we'll move into the solutions that need to be implemented. But perhaps if we can do a quick litmus test with the audience members, by show of hands, how many of you are quite negative on the Africa Rising narrative at the moment? I see one, a few hands. Well, I think it's a good indicator that we actually see fewer hands with regard to the negative sentiment on the African continent, because then the question comes about as to how do we change this, that we have no hands that represent a negative sentiment when it comes towards the African Rising story. Where do we start? Because so often we hear about finding adequate policy, getting the relevant capital in order to develop the infrastructure. Jacqueline, perhaps engage us as to the correlation between these three and how we need to ensure that we implement them in a multi-pronged approach.
Okay, so perhaps in theory they are sequential. So you need the policy first, then the capital will start to flow in and the FDI comes in.
Are we getting policy right? Let's start there.
Yeah, so it's about getting the policy right. But maybe we need to be more practical. Maybe it's about doing everything at the same time. Because time waits for no one, so you can't wait to get the policy right. And then, maybe you also need to show the investors that there's the political will to get things right, and they will come, whether the policy is right or not, if that makes sense. I mean, I look at Ethiopia now and what they're doing with their industrial parks. They're kind of doing everything simultaneously. So they're fixing the policy while they're putting in the infrastructure whilst they're attracting the investors. So maybe it's the synergies of all three at the same time that creates the positive perception that investors want to see.
Nicola, you're nodding your head here.
I am. I mean, I think that, if you take the human capital space, we have a youth bulge, we have a population that's growing. It's growing in real time. And education systems, higher education systems, these are long-term investments that have a long lag in terms of their impact. So what we in fact are going to need is very pragmatic, real-time, fit-for-purpose solutions that address the reality of a current cohort, a current generation of young people with the reality of current education systems and current provision. So we really need breakthrough solutions that operate in real time. And I think to the point that was made, you also need business-government partnerships. Again, I mean, when one talks policy, one really needs to think around the execution of processes and programs, again, in real time and with real deadlines and real time frames, and the kind of management of those processes rather than just the ideas and the frameworks for those processes.
Where are we getting this right? And Acha, maybe this is where you can come in, because so often when it comes to policy, the conversation, we believe, does take place between all relevant stakeholders. But the challenge is when we see sequential changes thereafter. Take Zimbabwe, for example, with its indigenization policy. South Africa here as well, where BE is deemed to be quite controversial. Are we still looking towards the East African state countries where they are getting the conversation regarding the balance of capital, policy, as well as how that translates into development? How is that working correctly in that region?
Well, I mean, first, I think the reality is the next 5 years are going to be tougher than the previous 5 years, right? And that's why I think I agree with Jackie, which is, if you try to do things sequentially, it'll take forever. Now, the reality is we need policies in place. Capital was flowing into the continent, and by the way, we're still the second highest return on FDI of any region in the world. So it's still very attractive to bring capital here. But because of all the macro situations, nobody knows what's going to happen to exchange rates in Nigeria. You see what's happening in Angola. So people are questioning. And I actually believe that fundamentally this is actually the right thing. It's good for the continent. I always say we talk about diversifying our economies, but when oil was at $100, if you didn't diversify, it was fine. Now when it's at 30, 40, or whatever it is at today, you're forced to, because if not, you just have no money, or you're going to go to the IMF and ask for a bailout, right? So I actually think it's a tough time, but it's actually good for us to finally get some of our policies right. And where are we getting it right? I'm a big fan of Rwanda, where we're going for the WEF. I mean, I think, they're very clear on, and it's not just policy, it's also just execution. I think we have a lot of plans. We know what needs to be done. It's not rocket science, to be fair, right? But it comes down to where the rubber hits the road and how do we get things done? How do you track? How do you monitor? And how do you bring some of the private sector discipline into the public sector? So again, yes, it's back to some of the the East African countries. I'm a huge fan of Cote d'Ivoire these days. I mean, these guys are growing at 10% a year. And you can see what they're doing with where the growth is going, right? And again, there's still a number of challenges, and it's coming from a lower base, but they're really trying to establish themselves as the hub across West Africa. Ethiopia, Jackie spoke about Ethiopia. Again, an amazing story of putting in place not just the policy, but the infrastructure to deliver on this. People can question some of the decisions around protectionism, right? People can question it, but the reality is they're following a path that's different from other countries, and they're doing very well. But again, if you do beyond the surface, you see a number of sectors that are, if you take the tech sector in Nigeria, the tech sector in Kenya, even though you say as in Nigeria overall, you're like, the country is struggling. We look at the tech sector, it's actually thriving. Look at the entertainment sector in Nigeria and Hollywood, right? So again, it's going below the surface to understand what is it that's allowing these sectors to thrive, and how can you replicate that across other sectors?
Are we managing to see the translation of regional policies translating into the national scheme of things? Jackie, Jacqueline and Kingsley, share your views with regard to this, because this appears to be what the fundamental challenge is.
I think one of the problems with our regional economic communities, the RECs, is there seems to be a disconnect between the planning and the implementation. So the planning happens at a regional level, at the EAC level, at the SADC level, but really implementation can only happen at a country level. Because remember, the regional bloc is just a collective of different countries. So they can come up with all these agendas and strategies, but really, in terms of implementation, it happens at a country level. And I'm not seeing that the countries and the regional levels are speaking to each other. And I think there's a fundamental disconnect. So I think it's until the countries internalize the targets that have been set at a regional level, they internalize them, they budget for them, that the regional blocks can actually begin to move forward, if that makes sense. Yeah.
Kingsley, your view?
Are we saying that our low growth is attributed to the absence of policy? I don't think so. I think we have a lot of policy frameworks across our governments within the continent. The biggest challenge is the implementation of policies. Now, somebody gave a very nice definition of policy. What's a policy? I think it was Scott who said, a policy is what you decide to do or not to do. That's your policy. Now, if you look at the policy frameworks that we are having across, are so many. The challenges is the implementation. Take, for instance, the SADC area. A few years ago, we developed a uni-visa policy that would allow easy movement of people across the SADC area, because we came to a conclusion that tourism presents a potential for growth. We called it a black gold. But we adopted the uni-visa policy. We developed the uni-visa policy, modeled it along the Schengen policy. But instead of implementing that, we ran into paralysis of implementation. Countries within the SADC started to argue around the revenue sharing before even the whole uni-visa framework is developed. The argument was around, how do we share revenues? Yeah. Countries were saying, listen, we are generating so much in terms of visas. Are we going to get that money? But no one focused in terms of putting instruments in place for the implementation of the policy. Mm-hmm. That's where the challenges are, here in our own country. We have a lot of policy frameworks that we've developed, and fortunately, recently we came up with a national development plan that seems to harness all the policies that we're developing within all spheres of government to be able to implement these growth policies. So the challenge is around implementation, and implementation is the biggest problem. Why problems? Of course, we need to have better human resource for the implementation of the policies. We haven't really invested a lot in terms of developing our own human resource capacity. I mean, if you take Brazil, they produce so many PhDs every year. What they are producing, I think, put together in this continent, we don't even match Brazil. They are generating a lot of knowledge. We're moving into the knowledge economy. So we're not developing better human resource to be able to implement our policies, and that's where the challenge is, and we need to invest in those areas.
I got a little bit nervous when you brought up Brazil because we know that they're also dealing with their own issues there, which might be similar to South Africa in some case. But on the topic of visas, Acha, this is certainly where you come in with regard to a recent report as well, which was revealed the number of African countries which are opening up their borders for the free movement of goods and people. And I understand Ghana has recently added its name to this list.
Yeah, so we started this piece of work with the World Economic Forum, actually, the Global Agenda Council and the African Development Bank. And looking to figure out, because if we're going to increase intra-Africa trade beyond the 12% it is today, and it's been there for a while, we need to allow Africans to travel to visit other African countries. And when we started the work, and we all complain as Africans about, we need visas to go here, we need visas to go there. But nobody had really put the facts together to say, South Africa, and if you need to go to all the other 53 countries, which ones do you need visas for, which ones don't you, which ones can you get visas on arrival? So we put that fact base together, and turns out, 4 years ago when we started, an African on average needed visas for 60% of African countries. And there were only 5 countries that allowed visa-free access. So either you can just fly in without a visa, or you can get a visa on arrival. There were only 5. Today, 4 years later, we're doing a lot of advocacy and promotion and talking about the matter. Today, we're at 14 countries that allow visa-free access to all Africans. Africans need visas for 55% of countries, so we're making some progress, though not fast enough. I'm from Cameroon, so I need visas to go to way too many places. But that's what we're trying to push, to say, look, you know what, we need to better open up visas. And you look at what Rwanda did, what Mauritius did. And we also understand why countries are not doing it, right? They talk about security concerns, they talk about jobs, right? How to protect jobs, they talk about visas being a source of revenue for embassies, right? So what happens? But there are ways around it, right? And so we're making a lot of, pushing countries quite a bit and leveraging, private sector and public sector across Africa to try to move the needle on that. And we're making progress, but I think it's a bit slow.
Exactly. On that topic of free movement of goods as well as people, fundamentally, another concern that also comes into play is what are we trading with each other? It doesn't help that Zambia, together with South Africa and even Kenya, are all sugar producers, because fundamentally we're not going to exchange those particular goods, but need to find markets and diversify our economies. Again, comes up as one of those fundamental themes. Kingsley and Jacqueline, if we do come to you to get your views with regard to the correct steps being taken with regard to diversification of economies, are we getting it right? And maybe with the manufacturing sector, which has often been highlighted as a significant growth engine for the continent.
There are a number of things that need to happen in terms of removing tariff barriers and non-tariff barriers. So as long as it's cheaper to import from China, there's absolutely no incentive for African countries to trade amongst themselves. So for example, the other day I heard that Zambia grows soya, which is important for the chicken feed industry. But it's actually cheaper to import from, is it Argentina? Because that sector is subsidized in Argentina. Yet Zambia is just sort of next door. So unless we really sort out the issue of infrastructure, which obviously is linked to competitiveness and reduces the cost of doing business, we're not going anywhere.
I mean, here in SADC, we developed the SADC trade protocols a few years ago, and I think up to now, a few member states have ratified that. But again, it has to do with the tariffs and non-tariff barriers that exist, even amongst ourselves, that are really inhibiting a better movement of goods across our borders. So that's one huge challenge. But that's why I'm saying there's a realization that it is a challenge, but how to address it, it's an issue. We haven't addressed this fundamental issue within the SADC area. I mean, if you look at intra-African trade, it's even worse. I mean, we can easily import a lot of flowers from Kenya, but do we do that? Kenya sends these flowers to the Netherlands. If we want to get them, we get them from the Netherlands. Botswana now, they've really developed very good beneficiation of diamonds within Botswana. And the question that we're all raising here, is there a need for South Africa to develop a diamond beneficiation, or do we need really to work with the Botswana diamond beneficiation that already exists there and develop it as a capacity that is there for the SADC area to do a lot of beneficiation within the SADC area. But those are decisions that have been taken at the political level, but the implementation is a huge challenge. And that's what we need to manage. And I think the contribution that even in the partnership, the private sector in partnership with the governmental sector that they can make, particularly the private sector, is to really try to capacitate the governmental sector to a very large extent in terms of implementation. In this country, in 1994, we had some of the big parastatals here seconding good bureaucrats to the government to try to help the governmental sector to improve. I think we need to get the private sector really investing a lot in terms of capacitating the governmental sector with respect to implementation, because the challenge is implementation, implementation, and implementation.
Implementation, exactly, which is key. And fundamentally, the buck all stops with us as individuals and capitalizing on the human capital that we have, regardless of whether we are the policymakers, whether we are the capitalists or investors, or those who keep everyone else in check with regard to this. We're going to take a quick ad break, but when we return, we take a look at how to ensure that implementation takes place with regard to improving the competitiveness of African economies. And what about the 1 billion people that we have on our continent, making sure that we use them efficiently? A warm welcome back to the special CNBC Africa broadcast, where we're highlighting the road to Kigali, where the 26th Annual World Economic Forum on Africa will be taking place. Now, just before the ad break, we highlighted some of the challenges, focusing again on policy together with increasing the amount of capital and foreign direct investment flows we see coming into SADC economies. But what about our people? The numbers, when you focus on the African continent, are alarming. When you take a look at the well over 1.1 billion people that we have on the continent, 75% of these under the age of 35. So a youthful demographic that we need to mobilize into contributing to economic growth. Nicola, this is where you fundamentally have to come in here, because you have co-founded and mastered the Harambee B program, which is an accelerator program to get young individuals in South Africa into the job market space. How do we get this right by also ensuring that there's sustainability in the levels of employment that we see? Because it's one thing for someone to be a waiter in a restaurant, but what we need to see them do is actively contribute to the economy.
Thank you. So, I think that one of the key lessons from the Harambee Youth Employment Accelerator is that, and I think we saw it in the WEF competitiveness report, is that actually once young people get into the economy, get into business environments, they can accumulate skills. They get the networks they need, they get the skills they need, they get the exposure they need to actually, and the confidence and the will to further develop themselves, to find new opportunities. It's extremely hard to accumulate the skills and to access opportunities when you're locked out of the economy. And what we have in South Africa, for example, is a huge number of young people who live in households that are effectively locked out of the economy for reasons of access barriers, for reasons of education, for reasons of their social networks, for a whole range of reasons, which have very little to do with that young person's potential, their attributes, their aspirations, which are completely different to their socioeconomic circumstance. And so I think that what we've managed to do with Harambee is break through some of those barriers, is just transition young people who have the potential from those households into the economy, and then they can fly. If a manager loves you, a lot of things are possible, right? If a business feels you're worth investing in, a lot of things are possible. And if you are getting a sustained income, you can finance your own further education, which is a big problem that a lot of young people have. And why we have such poor completion rates, which I think, when we talk about we don't get PhDs, and we can also question, whether the new economy needs, how many PhDs we need is one question. And then how many innovators, problem solvers, entrepreneurs, and people who are very adaptable in the workplace we need. And once we start understanding the changing nature of work and get young people into the economy, into productive economic activity, I think we can start to unlock the human capital that we have in our society in abundance in our young people.
What also strikes me about the program that you run is the mindset change, because it also is about ensuring that you enable these young individuals to think outside the box and not necessarily to follow the normal patterns, which has clearly worked in the South African perspective.
That's exactly right. And I think that actually we can leapfrog globally on this question, because if you look globally at the changing nature of work and the changing nature of the economy, in fact, the linear pathway from school to university, or a further education into work and stay in that work and progress in that work, that linearity is gone. Everybody, we need to understand that the best education may not be the best education for the work that needs to happen. What we have traditionally called the best education may not be what's needed. And in fact, in the Harambee process, the first thing we assess is people's learning potential, we call it, which is a set of cognitive capacities around learning and problem solving. And if you ask employers today, what is the single most important attribute that they would look for, other than basic work behaviors of the person is willing and committed and resolute and committed to work, the other attribute employers will look for is this ability to problem solve and the ability to adapt and the ability to learn, because the environment is changing so much. And so I think we really need to rethink this linear process between education and work. And I think if we do, it can liberate us from a paralysis we have around the problems in our education system. I'm not saying we mustn't address them. Of course we must. We have to be tackling our education systems. We have to be tackling skills and our systems for training. But there are other short-term solutions we can find, and when we massify them, we can achieve a lot.
Are we saying that the whole world, I was in Davos this week, and the discussion or the theme of Davos was the fourth industrial revolution, which is essentially driven by knowledge. And if you look at the knowledge deficit coming from our own continent, we're lacking behind a lot. Are we saying that we should not spend a lot of resources in terms of capacitating people here to be at the same level of this knowledge economy that is emerging around the world? Because a lot of things that are really driving a lot of growth. If you look at a lot of big companies that are listed in big stock exchange, Facebook, and that's our knowledge. There's nothing that is there, and we're lacking behind, and we need to be innovative in terms of coming up with new ideas here that will drive our own growth. And for that, we really require very sophisticated skills. There's a discussion going on now that a lot of people who don't have necessary skills will be left out. But what do we do to position ourselves for the future? I think we really need to invest a lot in terms of generating this knowledge. It's not a coincidence that you find today Harvard is dominated by Chinese students. They send them there to acquire a lot of knowledge. Don't we need to invest in that?
Yeah, exactly. Fundamentally, we do. Go ahead.
Sorry, just to add to what Nicola said, I think sometimes the solutions are actually a lot easier. Maybe sometimes we complicate things. I think the solution is just getting all the relevant stakeholders in the same room at the same time. Business, educators, the people who set the curricula, and they just need to have a conversation. So you as business, what skills do you need now, in 10 years, in 20 years? You, the people who set the curriculum, how do you respond to those needs? It really is that simple. Because unless we do that, we continue to churn out university students who have skills that are irrelevant for the world that we live in.
Implementation.
But we need to talk. That's the solution. We need to talk.
Exactly.
No, I was going to say, absolutely. just a couple of points on this, because I think we all have strong perspectives. So we did a survey as McKinsey, and if you ask the businesses around the world, by the way, how well are university graduates trained for the job, right? 40% of businesses will say, they're properly trained. If you ask the educational providers, how good of a job do you do to train your students for the job, 70% say they do a good job, right? And that's because they have not come together to the table. And that's what Harambee, we have a program called Generation. We do that, right? Bring them to the table, agree on what kind of skills do you need, develop the curriculum together, but also agree on an off-take contract. Say, okay, if we now train these students for you, will you take them, right? So that's one. Two is, like you said at the beginning, I think, we have a huge opportunity we have the biggest youthful population in the world as a continent, and we will have the largest workforce in the world in the next 20, 25 years. Now, that's a double-edged sword, right? And I agree with Kingsley. In some ways, we do need the knowledge, but the question is, I don't think it's an or, I think it's an and, right? I'll give you a number. Africa today graduates 45 million high school students. There are universities places for 4 million, 4 out of 45. Right, so we have 8% tertiary education rates. India is at 24. To get to the India level, we need to build 135 Harvards every year for the next 20 years. Now, we're not going to get there, right? That's one. Two is when we did the work in South Africa, looking at the big 5 bold priorities for the country, looked at 5 different sectors, that would create another R1 trillion of GDP and contribute to and 3.4 million jobs. Now, out of those 3.4 million jobs that are needed for these 4 sectors, only 22 require a university degree, right? Most of these jobs are require is vocational training, right? But today we had 8%, Nicola probably knows the number better, of vocational training in South Africa. So we need to fundamentally shift that, not just in South Africa, but across the continent. So I think it's an and, it's not an or.
How do we get it right as well when we always have a continued focus on small and medium enterprises, bearing in mind that SMMEs go from a ranging scale from startups to the size and caliber of a company that could be backed by the IDC, for example, with regard to access to markets, ensuring that there's a sufficient capital behind the company to meet its growth trajectory. How do we incorporate these companies, not only within the education scheme, together with ensuring that the youth participate in the economy, but being part of the regional story? Can we get it right? Jacqueline? Asha?
I'm looking at Jackie from the IDC, she funds them.
I think it's a very good question, because I think when we speak regional, we always focus on the big companies. Nobody talks about the SMEs. And how do the SMEs begin to access markets beyond their own home markets? So it's a very good question. So I don't know there must be SME business associations, and what are they doing to fight for their memberships in order to gain access? But I think the fundamental issue, I think, is information asymmetry. So I don't think the SMEs always have the information that they require. So I think it's access to information. So if you're a small business, how do you even begin to know about Zambia? How do you even begin to think about getting into Tanzania,
Part of the issue we have is how do you scale up these SMEs? So there are a number of people who employ 1 or 2 people, but at the end, to address some of the unemployment challenges we have that Nicola and others are looking at addressing, we need to find a way to scale them up. I always say, how do you create 20 Dangotes, right, in Africa, right? People are going to create, employ 20,000, 40,000 people. And that's the challenge. Now, if you talk to the SMEs, and we did a survey across the continent, the issues they face are not that different from what large companies face. It's the ease of doing business. It's harder, if there's no power in a country, it's harder for them. It's more expensive, it's competitive. If it's more cheaper to import from China than compete with them. So I think a lot of the ease of doing business factors that the WEF covers here are kind of things that countries need to put in place to help not just the large companies, but also the SMEs.
Mm-hmm. In 1991, I remember this, during the US presidential debate, the main issue that was really dividing the Republicans and the Democrats was around the question of information highway. Al Gore was quite eloquent in defining the information highway. But if you look at the contribution of technology or technology-driven initiatives or inventions that have come up in the United States that have contributed in growing the GDP of the US, they've been driven to a very large extent by technology. And the US, I think at that stage, took right position to set up better technological systems that would enable innovation and research. And so they put a lot of resources in that. I think 1991, if I'm not mistaken, the GDP of the US was less than 10 trillion. The GDP of the US now is running close to $15, $16 trillion. But if you look at what are the bigger or the major contributors in that economy, are technology-driven initiatives. We need to invest in that. They're going to enable growth. Sometimes we really look into the 1 billion people that we have in the continent from 2 angles. One look at it as consumers. But there's another angle that looks at 1 billion as producers. And if 1 billion can be having initiatives to produce new ideas that will really develop our own continent, it would make a major contribution. I don't think we need to think very small. There's a need really to graduate SMMEs to bigger companies as we grow them. There's no need for them to remain SMMEs forever.
How do we get it right when we still need to focus on fundamentals like infrastructure development, letting go of those barriers to trade, and using technology, as you said, to ensure that we have a economy of producers, which can also benefit the education element that we brought up earlier on, the trade element, the access to information, as well as the economic contribution going forward. Jacqueline?
I was going to say that we're also seeing a shift in multinationals that are now investing on the continent.
And there's investing, right?
Or
given
investing.
the recent headlines.
No, I choose to be positive, investing. So for example, General Electric is doing amazing work. So they're investing on the continent, but they're doing it very differently. So they're saying that we are going to procure locally from local SMEs. We're going to provide them access to markets. We're going to train them. We're going to give them access to technology. So as the IDC, for example, we have partnered with them. So we fund the SMEs that supply into GE, so GE can make the locomotives because they have the contract. So I think we're seeing a shift, and it's very nice to see because it's resulting in real transformation on the continent. So I think once the GE case study works here, how do we begin to replicate that across the continent? So that multinationals don't just come in with stuff that's been produced elsewhere and dump it on the continent, but they actually incorporate the local SMEs into their supply chains. Yeah.
But also, how do countries make sure that it happens, right? So South Africa had a clear strategy to make sure that GE manufactures locomotives locally, and how do you make sure that that happens and the incentives other countries put in place for that to take place more broadly?
I'm happy you brought that up because that also ties into how many African companies on the continent actually generate revenues of more than 1 billion per annum. And you have an interesting stat with regard to that, Acha, which might surprise us here in the audience.
No, yeah, so part of the work we're doing, the new Lines and Move report, was really just understand the landscape of African companies, right? And I think we're developing what we believe is the most comprehensive database of companies with revenues over $500 million on the continent today. And it's hard to ask a question here, but I always ask a question about how many companies make $1 billion or more in revenue in Africa. And most people think it's somewhere between 50 to 100. The reality, it's 400 companies make $1 billion or more in revenue in Africa. I can tell you 27% of that revenue comes from multinationals. More than half comes from local companies, which is good. So we have some good local companies that are growing. The challenge, however, on the other end is if you look at the Fortune 500 list, there's no single African company in the Fortune 500, right? So the question is, how do we scale up? We started the SMME, how do we scale it up to bigger companies, but how do we then scale it up more broadly across, right? And we're starting to look into what the constraints are. But the reality, again, for us as a continent of 1 billion people, look at India has 7 companies in the Fortune 500, Brazil has 9, China has 100, right? How do you make sure more representative at that global scale as well?
Again, alluding to that multi-pronged approach. But what we'll do is get some questions from the audience members. We will take questions in series of 3s. If you do have a question, kindly raise your hand. A roving mic will make its way to you and you can address your questions or opinion to any of our panelists. I understand that we're not too much of a shy crowd. We've got our first question up here in the front. If the mic can please make its way down. If there are follow-up questions, kindly raise your hand and the mic will make its way to you.
Thank you.
I don't think you need to introduce yourself, but it's okay.
Thank you. I'd rather not. I think the question I want to know and ask the panelists is, the continent as a whole, we are what, maybe 50 years, give or take on average. And if we look ahead and we are comparing ourselves, and we are in a developing economy, we are comparing ourselves with the global economies that are long established, well run, which have been in existence for hundreds of years. But the world doesn't wait for us to catch up. What are the 5 key areas of growth that we must focus on as a continent to catapult us and frog leap us, into those numbers and areas of growth that will be comparable with the world? But doing that, how do we become inclusive? How do we make sure that we raise the poverty levels, we raise the income per capitas, that the growth is felt from the bottom? And how do we harness domestic capital? 400 companies, over $1 billion in revenues. Does that come back and rotate and create more opportunities for others? Or it's a capital flight, and sits somewhere and earns interest. How do we make sure that that turns over and over again to make a difference in the economy and in the lives of the Africans? Thank you.
My question for the panel is, I've heard a lot about policy and how, and also about questions of implementation and how there is a gap between policy development and implementation. And also how a lot about attracting FDI. But I haven't heard much about the role of domestic investors in funding, or for example, in growing South Africa's economy. Where is the role of domestic investors? What are they doing in that regard? And how is there a reality, is a possibility that they can actually step into this role, which seems to have been almost exclusively carved out for FDI?
Thank you so much for your questions, sir. We'll take one more from the back before our panel responds.
My name is Yvonne. I just want to ask the panelists, when are we going to begin trading amongst ourselves as Africans? It becomes so difficult. Even just flying to a country in Africa, one has to go to Europe first. How are we going to get that right? And how do we get big companies who come to invest in our countries, taking our resources, refining them in their countries, bringing them back to Africa, double the price? Do they pay the taxes in the countries that they make business in? Or do they just build schools, as usual? We shall build schools, we shall feed them patents. How do we make sure that this political will and the people in those countries also benefit?
Thank you so much. We'll respond to these these three questions first before coming back to another round of questions from the floor. Let's pick up on the first one, which was asked by Ms. Maponya, the 5 key areas which we need to focus on to drive inclusive growth. That also coupled with the questions which I think actually are quite similar with regard to domestic capital, capital flight or reinvesting on the ground. Achai, take it to respond to the 5 key points.
Happy to. I think there are multiple questions in that question, actually, but one is on the inclusive growth. Part of the issue, and we looked at this, was the sectors that drive growth are different from those that drive employment, right? So if you look at the growth we're having on the continent, if I take the resource sector, for example, up to 2010, resource contributed 25%, a quarter of Africa's growth. Net in those 10 years, resource destroyed jobs, right? And as you know, sectors that drive jobs are agriculture, wholesale and retail, trade, construction, those kinds of sectors, and that's what we need to focus on more. Now, in terms of your imperatives, as we're actually thinking about the big 5 for the continent, one, and I think it's the same other point, domestic resource mobilization. With what's happening globally, we're definitely seeing capital leave the continent, and we just need to raise our own capital, right? So whether it's, two tax revenues, one, if you take Nigeria, for example, Nigeria, if you look at the structure of its economy, oil and gas only represents 14% of GDP. So it's been able to diversify its economy from a GDP perspective. However, oil and gas is still 85% of government revenue. So that other 86%, they're not monetizing. So the question is, how do you monetize that? That savings, right? Savings rates have declined significantly over the last 5 years. On the continent, we're starting to look at that. Pensions. So there's a big piece around domestic resource mobilization that I think is critical. 2, education. We've spoken a lot about it. I think it's absolutely fundamental if we're going to continue growing. 3 is infrastructure. We think we need to, actually the levels of investments have grown. South Africa, for example, spends 4.9% of its GDP on infrastructure, which is, the 3rd highest of all emerging markets. The question in many cases is not just about, funding, but about how you actually deliver on time within budget. What infrastructure do you do? How do you maintain versus spending more money? There's a lot that needs to be done on the infrastructure front. Tech, we've talked a lot about tech, because that will allow us to leapfrog in many ways, and it's fundamentally changing. We look at the e-commerce sites today, how people are shopping online. We look at what it's doing to retail, to education in many ways, to healthcare, right? So I think these are 3 or 4 big areas that we need to focus on.
A second response to domestic capital. You mentioned, you alluded to that slightly as a representative of private sector, Nicola?
Well, actually, just following on from Acha's point about trying to find that intersect between what is growth driving and job-rich growth driving. And then I want to add a 3rd dimension, jobs that young people would be suited to or want to do, okay? Because, one has to find the intersect with that as well. And given that that's who our population is and will increasingly be. So, I mean, I think that there is a tremendous opportunity, certainly in this part of the continent, for the business process servicing sectors to grow. And I think that they are a very rich space of opportunity where those three things intersect. You can import jobs in that area, you can export jobs in that area, and you can grow in a progression, tech skills, business skills that the economy needs in that sector. So you can grow in that sector the skills. I mean, young people can acquire and accumulate technological and business services knowledge that they can then apply in small business, in starting their own businesses. So you're developing a whole lot of portable technological and business skills in that sector, financial skills and others. So I just really encourage a focus on that area. And I think it's an area where government, through e-government, but generally government, as well as industry as a whole, can really partner to unlock value. You take a part of South Africa like Gauteng, where you have a huge youth, you have the epicenter of youth unemployment and an epicenter of some of the best business process services in the world, and financial services in the world. And you know, you just try and combine those two. I think there's a lot to unlock.
Exactly. To go back to Yvonne's question with regard to the flying agreements, as well as, again, it probably takes us back to the conversation with regard to regional policies and how that infiltrates down to a country level, but also holding companies accountable, ensuring that they don't necessarily participate in CSIR projects or corporate social responsibility projects, which don't really have much of an impact. And with regard to the flying element, I think the Yamoussoukro agreement also comes to mind, where it's a great policy to open up African skies, but again, failure on implementation. Any response to that?
Well, Google, I think the biggest problem, and I don't think we've dealt with the problem in the continent as such. The biggest problem that we have in the continent is that the African state, it's built on the ashes, on the model of the colonial state, which was basically meant to supply raw material and supply everything to the colonial master. We haven't changed that consumption pattern because the consumption pattern keeps on informing how we interact with each other. It's much easier to fly from here to London, but it's very problematic to fly from Joburg to N'Djamena. You will not find that. It's because the consumption pattern of the colonial state was such that the colonies must support and supply raw material and resources to the colonial masses. We haven't changed that pattern. And as long as we keep on sticking to this, you hear issues of beneficiations and so on. They have to do with changing the consumption pattern of how we construct our own state system and how we define the interests of our own state system. Once we do that, we're going to be able to deal with the related issues that are to the benefit of the state, economic benefit. And how do we harness development, and how do we harness the potential that exists within the continent? It's much easier, I can tell you, for Kenyans to import a lot of things from London rather than import them from Joburg, even though it's much cheaper. But because it's a model of the colonial state, that's how it was intended to do, and we haven't changed that pattern.
What I'll do, because we've run out of time for the questions, but we will take questions off air with regard to some commentary that might come through from the floor. But given the line that you've left us with to consider as we go home this evening, but also as we prepare to make our journey to Kigali for the World Economic Forum on Africa, we understand the fundamentals that need to be put in place. We've highlighted the top 5 priorities, but how do we ensure that implementation takes place? And when it doesn't, that there is a level of accountability? Kingsley, let's start off with you.
I think what we need to do is to get active citizen participation in the implementation of policies, because this implementation are not only confined to government. The private sector need to do their share in terms of implementing some of the policies that have been taken, but government needs to keep on creating conducive conditions for business to thrive and for implementation of policies. And we need to capacitate the modern African state to give it much more capacity required to succeed as a state. Most of our states are very weak states. They will not compete and they are unable to compete on a global front. We need to develop enough capacity for the state institution.
Nicola?
I think I would just add the question of prioritization focus. I think just choosing a few things that have the best chance of success, and where there's private and public sector in those spaces where there's a lot of alignment. And therefore where implementation can be the focus rather than where there's massive areas of contestation. And I think that there are such areas we can find.
Jacqueline, your closing remarks in ensuring that there's accountability to implementation?
I don't know, I'm going to say something, I don't know if it's controversial, but maybe we just need to outsource oversight of implementation to McKinsey. Yeah, he hasn't paid me anything. No. But not necessarily McKinsey, but maybe outsource to professionals who are used to running large program management offices. You know what I mean? So we want to build a road from here to there. We don't necessarily have the skills to monitor the implementation, but we're going to outsource it to an independent entity that can just give us status updates. This is where you are. This is what you need to do. These are the risks. This is how you mitigate the risks. This is how you manage the risks.
Exactly.
Maybe we expect too much from government to be everything.
Don't forget, outsourcing must fall campaign that is going on in this country.
And sorry, just a very quick one. He raised the question of where the domestic investors. I think we're seeing a lot of that. There are a lot of African multinationals. Actually, the concept of an African multinational is relatively a new one, sort of in the last 10 years. You know, so we've seen the Dangotes, the MTN. So I think that is happening a lot. But over and above that, I think we also need to begin to tap into pension funds. Nigeria's got huge pension funds, and we're not even beginning to realize what they can do for us. And we could use those pension funds to build the infrastructure, to do the low-cost housing, and all the meet our infrastructure needs. Yeah.
Acha, your closing remarks?
I mean, as much as I love for them to outsource it to us, I think Jackie's point, and I totally agree, it's about execution. How do you track it? And you look at the countries we've talked about, the Ethiopias, and the Rwandas, the Cote d'Ivoire, they run the government as a private sector enterprise. The ministers, have KPIs, they meet every week and they track where they are with projects. I mean, typically what a private sector would do. So I think we just need to see a lot more of that private sector type mentality into the public sector. That's one. And two is, I think too many of us shy away from going to the public sector, right? And we sit here and talk about what's happening. And I think, more of us need to go in and try to bring sort of what we've learned in the private sector into the public sector.
Exactly. Well, hopefully on that note, we won't see any more hands being raised with regard to negative sentiment on the African continent and the SADC nations. Perhaps an indication, anyone still feeling quite bearish? Well, a hand at the back there, but and someone else. Okay, well, we will continue to change the mindset slowly but surely by implementing the policies that have been highlighted today. But that's where we do have to leave our conversation for, as we've highlighted the key matters that need to be addressed by the SADC economies to ensure that they remain competitive as business leaders, corporate leaders, together with government officials, prepare to meet in Kigali for the World Economic Forum on Africa. That's where we bring our conversation to an end. From myself, Gugulethu Cele, and our panelists and audience members today, thank you for joining us. It's goodbye for now.